Good afternoon, everybody. Today is Friday, the 13th of July, 2012, and this is Brian Shannon speaking from alphatrends.net. We had quite an interesting week, and these markets have been proving to be very interesting, obviously, of late. Let's take a look at the numbers. For the week, the S&P 500 did close with a slight gain here after being down a couple percentage points. Today was obviously a big reversal day. The NASDAQ down 1% for the week, and a lot of that can be attributed, I think, to the weakness in the semiconductors, which were down 3.3%. So they bounced a little bit here today, the semiconductors, but still a rough area for the market right now. Let's take a look at this weekly chart of the S&P 500. You can see that we've been working away at this area for the last couple of weeks at about 137, we can call it, and it was prior resistance last year, and then we held as support a little bit, and now it's once again acting as support. We do have a rising 40-week moving average, but we've got a declining 10-week or 50-day moving average. So when we look at the daily time frame here, and you can see how easy it is to click between time frames, and I'm using Realtick here is what we look at, and each Friday when I do these videos is because Realtick sponsors them and puts them on, allows me to put them on YouTube for you guys to view. So if you're viewing it on YouTube or anywhere else, I do have a subscription service, and I don't talk about it very much. So anyways, take a look at alphatrends.net and take a look at Realtick as well, because I think they're a great trading and analysis platform. The S&P 500, though, we were talking this week about this trend line here, and on the 30-minute time frame, you can see that we broke below it here just a couple days ago briefly, and yesterday, we rallied from that level. We were also in this area that we've been talking about as far as a retracement level off of the recent low there. We also were talking about the retracement of the lows from June, and we didn't quite get a 50% pullback, but you can see what happened in here this week, and again, this is why we don't use these Fibonacci tools. I warned the other day when I was talking about them that they're good areas to be aware of, but there was no magic in the Fibonacci this time. It wasn't the number that got hit and we bounced from, but we did close this gap from earlier in the month, and that is basically tied in with the trend line, is where we got this bounce from today. Now, I've been talking about, and I always talk about, the declining 5-day moving average, and the market being guilty till proven innocent below that, and I that's the way I view the markets here. And if you look at what happened today, it wasn't very unusual compared to the last couple times. That is, we gapped above the 5-day moving average right here. We closed above it this day and then gapped higher, and today we gapped up as well. You can see here, I don't know why it's not showing that as a gap, but we gapped up a little bit and ran right to daily R2 and continued to move higher. So the entire session was spent above that daily volume weighted average price. That's this dotted line in here. We had that initial explosion, a slight pullback, and then the market continued to move higher here. So if you weren't in it to begin with, the lower risk entry was right here with a stop just below this level. And like it happens a lot of times when you get these big gaps, we end up closing near the highs of the day. What's actually more typical is maybe midday to see a slight drift down to, and maybe even slightly through, the volume weighted average price that gets some shorts involved, and then we kind of explode into the close. So kind of keep that in mind for future reference. But going back to the daily time frame, we found some support in this area where the gap was closed, and we do still have on this daily time frame the pattern of basically that this channel that we had spoken about, which is represented by higher highs and these higher lows here. So this week's low is going to be important going forward at about 132.5 is just what we'll call it as an eyeball level. But there continues to be obviously a lot of volatility and uncertainty in this market. We're still working really again at about that 136, 137 level. So this patient changes condition almost daily, it seems. So you have to just remain flexible. But the pattern of these lower highs and lower lows with the declining 5-day moving average was interrupted, and it did so in a way that actually made it a little bit difficult to get involved, except on that 1-minute chart at about this level here. So next week we want to see this level hold. It would be nice to see maybe the market settle in a little bit and see this 50-day moving average begin to flatten out a little bit, that would, I think, allow this market to settle down and catch its breath and build a better base to move forward from. The I'm sorry, not the financials, but the semiconductors, found some support just above that prior important level at about 62, between 62 and 61 and a half, basically 61 and a half to 62. This is the important level here. We didn't break a lower low. We can see that on the weekly time frame that we've still got this little pattern, recent pattern above the 40-week or 200-day moving average intact. And now we've got, let's take a look at the 30. We can see that this is the range that the little band of support that we were talking about. 63 was a big level as well that we had been talking about earlier. It kind of has lost its importance a little bit, I think, the $63 level. So, we want to look at these 30-minute time frames and say, we got down to the thick of where the big volume has occurred recently. We bounced. We still got a declining 5-day moving average. So I think next week, some pullback from this level in here down towards 62.75, 62 and a half would be a good thing. It would allow this 5-day moving average to flatten out a little bit, and then on the daily time frame, we're still we still have to be aware of breaking a trend line doesn't mean it's breaking down. It means that once we see the lower highs and lower lows, and we want to be aware that it doesn't make sense to sell short after a 4 or 5-day decline. Now, I'm going to go to the semiconductors again here because these are the bigger levels that we were talking about. A couple weeks ago we were talking about this as the potential price target for a rally, and it came right up to that level, right, with a declining 50-day moving average. That 50-day moving average, which is green, continues to decline at a rapid rate. We've got a declining 10 and 20. We're oversold in here, and we've come down, broken some key levels. This 30 and a half, $30.80 rather, is, I think, kind of similar to about the 61 and a half level for the Qs. So we're looking at the Qs right now, and while we're holding this 61 and a half to 62 level, the semiconductors obviously have broken that $30.50 to 31 level, and we're getting close to that. Let's see if this level does provide resistance next week. If that's the case, we're going to maybe kind of settle in near that $30 level, but it looks like it could potentially still bounce here. We got hit really hard this week, and again for the week we ended up down 3.3%, and that was even after today's 1.25% rally. So this group got a little oversold, and could bounce a little bit further. We'll see how that 31-ish level holds. The Russell 2000 actually behaved fairly well here. If you look at, we were talking about, of course, this $78 level for the last several months as it was first a very important level of support. Then we found resistance in that area, and we were talking about this band of resistance that was found in here. We came down to the low end of that range and really, I think, shook some people out hard, but that 78 was an important level, which did hold on a closing basis on Thursday, and today obviously we got a little bit further upside, so we came down and closed the gap basically in here as well. It would be ideal to see a pullback maybe towards 78 and a half, 79 early next week, and then it kind of settles in, and then we can kind of rebuild a little bit better. But it's nice to see on this daily time frame that we broke this trend line a couple weeks ago, and that actually if we extend it, kind of we're back up above that. We've got these higher lows, these two higher lows in here, and the bigger level that this market has to deal with on the upside is near about 82 to 82 and a half right now. And again, they're areas of support or resistance. They're not always an exact precise number. Some people will lead you to believe that they could be, but the Russell 2000 again, showing some good movement here this week that broke the pattern of the lower highs and lower lows, and now we'd like to see a pullback that creates an obvious higher low down near 79, maybe even 78 and a half would be the good place to see that happen. And you can see all the volume that's traded over the last month or so down near near about 76 and a half, 77. So it should provide some decent support underneath there. But next week, let's just keep an eye on about 78 and a half and see if it can hold above that. The financials were up 2.8% today, so they held the level that we were kind of looking for them to. They broke this trend line that's been intact since the beginning of the month, and again, trend line breaks don't mean a reversal. We did have a low declining 5-day moving average. We can see that in here, and we got back above the range early today, and this was what we were looking at as potential resistance. It just sliced through that. People will say, "Oh, there's resistance at 1460 when the market's down here." There's potential resistance at 1460 because obviously it was like a hot knife through butter at that point here, and it was just a kind of a strange week, I think. If you look at this, continued fraud that happens, with the manipulated LIBOR rates, this mess with PF Global and the fraud that occurred there, and even you look at a stock like I was harping on this stock last year, which is Penson. It continues to make new lows, and they got they merged with someone or someone bought them, but they continue to be a terrible stock. And seems like they're out of business, but somebody else acquired the mess. So that deal was announced, by the way, back in here, and the stock ran to 40 cents. People got excited about the news, but again, these stocks, when they're in a downtrend, they're guilty till proven innocent. I thought it was also interesting this week that the 10-year yield is back down to close to record levels. 1.499. Basically, this TNX gives the approximate yield of the 10-year note. And these are all-time lows in here. These are I think they were all-time 100+ year lows in yield. So the market continues to just kind of mess with everyone, longs and shorts, with this amazing volatility. There is some structure in here, but no one's making every move. I can assure you that. There's people that will lead you to believe that they're catching every move long and short. It simply doesn't happen. So if you're feeling like you're left behind in some of these moves and you're underperforming on a day like today, remind yourself of how well you do on some of the days when the market doesn't perform as well, and that a consistent, objective approach to the market is going to be much more consistent over time than it is to be chasing news headlines and that sort of thing. Thanks for tuning in, and have a great weekend.